Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Craig Cecilio, who's the founder and CEO of DiversyFund. Craig, welcome to the program.
Hey, Mike, thanks for having me on the show. Appreciate it.
You're welcome. I want to hear all about what you do and how you do it and your entrepreneurial journey, but I many times like to start off with, ooh, that's a cool name, or that's a cool title you give yourself. So DiversyFund, so diversify and fund. Give us a little background on how you came up with the name of your company.
That was interesting. So I was working with a firm, I think it was back in 2014, and they were focused on giving me a name in real estate. And I said, I want to focus more on diversification. Yeah. And then I used the word fund because we're going to use fund structures, and we just combine these words together. We couldn't do diversification fund or diversify. Those names were taken. So we kind of came up with DiversyFund. We brought those two words together. And kind of the reason behind that name and not having any real estate in the name itself is because we want to expand our products outside of real estate one day. So I always want to keep that door open because I don't want to rebrand ourselves like 5 or 10 years down the road. That's just a pain in the ass to do that stuff. Excuse me here. To do that. And so we kept that open because what we want to do is really serve a great product to people. And once we do that, then we'd introduce more products to people.
Yeah, you gotta get the proof of concept going and then go, oh, well, if you like these, then how about this for diversification? And you can accomplish what you just said with what you're doing on your website as a tagline. You know, DiversyFund, diversified real estate investments. Crisp, clean, simple, and then, you know, down the road you can go ... and more, or whatever the case is. So at what point in your entrepreneurial journey did you get into real estate and then decide maybe I need to start a fund that allows people to diversify their investments in real estate?
And you got to go way, way, way back in time to talk about that. And I remember when I was a college student at University of Colorado Boulders, where I went to school, and I saw a condo, and I went to my parents. I'm like, hey, can we buy a condo? And I could be a renter, and I could have somebody on campus rent it with me. And it was off Broadway, and it was like $90,000 at the time. I think the year was probably 1992 or one of those years. I forget which year I came up with the idea. 91 was my first year out there, so it was 91 I came up with the idea. And today, that same condo, Broadway in Boulder, Colorado, is probably the $1 million range. So kind of looking back, I always kind of wanted to get involved with it. I'm not sure where the seeds were planted. It had to be somewhere in kind of my childhood, but that was 18 years old at that time period, and I already wanted to get into real estate.
Yeah. Well, and then did you do like the typical fix and flip, or did you, what got you then into real estate?
Oh, I mean, first of all, my parents said, no, we're not going to do it. I'm like, what? So I was like 18 years old.
That.
You don't really, you don't know, I had no idea how to raise capital or find an investor besides mom and dad at that point in time. So I think that kind of put me on a path. So when I did kind of graduate from school and I moved out to California, one of the first things I did was get my real estate license and started making friends with people in the real estate industry and the syndication industry. And within my first year, I met a developer who'd done thousands of projects, and they started mentoring me on stuff. And that's kind of really when I started doing it full time and getting going.
And so with what you're offering, you know, you think about getting, quote unquote, into real estate for investment purposes, for, you know, growth, portfolio, tax write-offs, all those things. You think about all the knowledge you need to have, and should I get a real estate license? Should I work with a realtor? And should I buy and hold and sell and fix and flip? What you're offering is similar, and this is the question, how is what you offer similar or different to a REIT, a real estate investment trust? Because you can start with, in your fund, a minimum of $500. So talk a little bit about how those similarities are.
Yeah, ours is really applying technology and innovation to it. So we open up private markets, the private offering that's publicly registered. So there's not a lot of those out there that have the returns of the private markets that anybody could invest in. So there's very few and far between. And for minimums as low as $500, we aggregate those funds together, pool those funds together, and we buy institutional quality investments and multifamily investments throughout the U.S. And those investments, really, if you're a person who want to do it on your own, it would take you anywhere from $5 to $10 million of a down payment to come up with that. And most people don't have that stuff.
Yeah.
These are more reserved for institutions. So we're able to kind of use some of the crowdfunding rules. I call it micro investing for people. So people could start out with as low as $500, and you can do as much as you want to as well. We have no limits on that side. And they could at least get their feet wet and get started on their own personal journey into real estate.
So then are they going to your website and seeing, oh, look, here's this property in whatever state, and it's this type of building, and when I put money in, I'm going to be a part owner of this? Or is it just I'm putting money in, and here's all kinds of projects you guys are doing? So do they know where the money is, and do they have like literal ownership, their name's on the title to this property?
Yeah, today we have it set up as a fund. It's got a $50 million limit, one fund. Another fund has a $75 million limit. So we have 10 to about 15 assets per fund. We do have full transparency on those assets. We tell people all about those assets we're investing in. For the economies of scale with the compliance and the compliance, let me use it one more time, compliance, it doesn't allow us to do a single asset, because another thing with compliance is we have to get qualified to the SEC to offer this. And so we would have to open that up every single property, and the turnaround time to do that could be up to 6 months, and escrows are usually 60 to 90 days. So it doesn't really work mechanically, and the costs are a little too high to do that. And so those costs would eat into the return of the customer. So that's why we do a fund type structure today with our offerings.
So I'm thinking of this as just someone like myself curious at how this works. So I'm asking questions that probably you get from people you talk to that are looking to invest. So when you're thinking of investing in real estate, is a draw or isn't a draw something where it's like I can touch it and feel it, and this is real estate, and this is a house or an apartment building or a commercial building, and I'm part of this, and look, my name's on the title, and I own 0.00% or 10% or whatever. So the difference in what you're doing is it's similar to a REIT because it's a fund. How do you explain it to people where it's like, okay, it's similar to real estate investing, but you're not like the tangible side of things?
Well, I believe it is a tangible side. So you're investing into a tangible asset. And our structure is set up as a REIT right now, too. So it's an online REIT. And very easy to do, very easy to transact. We have an app. It's all online. It's all automated process. I think one of the greatest things about it is we don't have any people involved in the transaction. Yes, we do have a customer service component to it, but the whole thing is automated, and which I believe really increases the opportunity for people, because the fact is there's not someone sizing you up, asking questions, pushing you into an investment. This is at your own volition. We put the information up on the site through our app. You go on there, you can transact easily. It connects to your bank account. You just press a button. You can read all the documents that are on there. Very frictionless, seamless process for people. And it's non-intrusive, which is one of the big things. It doesn't judge you and see what your net worth is and who you are. It doesn't push you into something. It allows you to go at your own pace.
Yeah, I think that's a really flexibility, gives people the flexibility for, that path to financial freedom. That's huge. I love that. So when kind of backing up a little bit, when you were starting this, when this idea came about, I'm sure there were hurdles and obstacles and speed bumps and brick walls. What were some of the things you had to work through and persevere through to get to this point in your offerings?
Oh, yeah, I can't even.
And we only have we don't have 9 hours, so I'm sure.
Yeah. So first of all, it came out of the Jobs Act of 2012. That's when they passed some regulation, and it's a regulation, a couple things with the crowdfunding. But it didn't get enacted to 2016. And then you don't want to be the first one doing this. I think the first one and the type of regulation we used started in July 2016. That's 4 years later, right? Really Congress efficient, right? 4 years later. So we didn't really get ours up and running to have the minimums as low as $500 to June of 2019, because we had to get it qualified, is the correct word, through the SEC. before we could even kind of test anything out. And that's just the way it works with them, is you just can't test it first. You gotta get qualified, and then you can test it. And what I mean about testing it is building out all the websites, all the marketing material, the collateral, getting feedback, building out the technology behind it, and all your engineers and all your coding and that stuff. So yeah, that was just getting that going. Nowadays things are a little bit more quick. Well, I thought they were quick. They're not really quick. They were pre-pandemic, but yeah, quicker, and they got slower. Now they're hopefully getting back to quick. They're still, the turnaround time's a little slow over there, but we that was a big thing, getting through all that stuff, the processes and putting the systems together. That was initially, and going into creating a new business too. And with the real estate world, if you've ever done a real estate transaction, you have to work with a lot of traditional, and I call them legacy businesses, and understanding that community and all the traders, insiders, I call them the gatekeepers, which are the bankers, the attorneys, the title companies, the escrows. We really had to do a lot of explain to them what we're doing. They didn't really kind of wrap their hands around it. And then we had to establish a track record for them to accept us. So for instance, when we did our first transaction, there's like, how does this work? And they're just kind of looking at stuff, and we're not getting the best rates for our loans. We're like, what's going on? We have a lot of experience, but they're saying, hey, this is a new thing. So we had to push through that, where today we've done a lot of transactions, over close to $300 million of the transactions. Today we get the best bank rate possible. Well, before they started going up the last few, weeks or days, I feel like it just went up overnight. But that was a struggle, kind of getting through that into that world and letting them know what we are. We're something new, but old, right, at the same time, and developing those relationships so we can get the debt, so we can get those first look deals, and so we can get all those people who want to do business with us. And that was a challenge, getting through that. And I was a little surprised about that, because I had a lot of experience going in. I thought that would carry us through it.
Yeah.
So we pushed through that, and we made through that, and and so here we are today.
Yeah. I mean, it really is kind of like old but new, or new but old, because it is like, look at all this money, and look, I've got this knowledge and I've got this experience, but until they see your fund or your organization with, qualified payment history and closed out and, gold star by it, and then the next deal, it becomes easier as you go, I'm certain, right? So now it's less of the burden. Now it's just the normal underwriting and the normal checks and balances and things like that. So now it has become because you've proven your worth.
Yeah. It might be 30,000 people who have invested in our platform, but proven concept. 30,000 people. That's 30,000 people who never would have this opportunity before, and we gave them. I could proud to say mission accomplished for us with that. I want to grow it more, of course, but it just feels so great to say that we gave 30,000 people an opportunity to participate.
So now when you think about investing in real estate and return on investment, what are you able to say? Because again, the big C word, compliance and all of that, you have to be careful. But obviously people are going to say, I want to invest in whatever that it is, fund, real estate, actual real estate REIT. What's my return? What's my risk? What's my return? So what's the mindset thinking on that?
Yeah, really looking at historical data, providing historical data in this asset class, and showing them, hey, this is what it's been done, and just sharing the historical data. So there's a lot of companies that have done this before. We've had a few properties that have gone full cycle. We could disclose those IRRs on those. We could disclose those ROIs on those ones, and really show it from an industry point of view, and show people, hey, this is a good hedge against the stock market. It's a good alternative investment for you. It should be part of your portfolio. That's why I like the minimum so much and the flexibility there. You could have, let's just say you have $10,000. You don't have to stick the whole $10,000 in. You could do $1,000. You could do $1,500. You could do $500. So it gives people opportunity to get their feet wet and just put a part of their portfolio into it, just so they can learn it and see how it works. It's so such a new concept, and for people to kind of grasp. And that's one of the things we are really focusing on now, is more than ever, is really educating people and understanding everybody has their own level of acumen on investments. Where are they? What's their financial knowledge? Do they know real estate? Do they know how to balance a portfolio? So we're really kind of focusing this year on really developing up our content and our education for people, to give them that kind of personalized attention and journey based on where they are. not only on just what their knowledge is, but where they are at their point in life.
Yeah. And it also, it makes me think too, that here we are talking about, investments. And just like you know that, you mentioned rates go up, down, and same with the Dow Jones or the NASDAQ and all the different, indices. Well, you should not go, ooh, things dropped, I need to get out, or ooh, things are great. So what do you say to someone that goes, hey, Craig, I want to move forward, and what's the timeline? How long should I stay in, or how long am I required to stay in, or when would I be able to take a return?
Yeah, you really want to stay in for a good 4 years at least. We say 4 to 6 years because we're looking at selling the properties depending on the market conditions. Like today, we put a lot of stuff in the market and got top dollar for it. We got crazy returns on the stuff. We have a bunch in escrow right now, and we went above our asking price. We got offers on that. So it's just it's a crazy environment. That's not going to last forever. That just doesn't happen. Every year it just doesn't go up like then going up. It's just something that's just different, right? Coming out of a pandemic, we have a war, inflation, all that stuff going on. This is kind of a unique time period. But looking at this long term is, hey, once we deploy that capital, in 4 years, what does that environment look like? Is it like the environment today? If it is, then you want to sell those assets. If it isn't, it's a little bit of a downturn. You kind of want to wait it out a little bit until people come in and they're buying more aggressively. More aggressively meaning they're almost buying for full price or maybe a little bit off if there's multiple offers come in. So that's really the management and the team understanding the market is at that point in time, and that's where you maximize your investment, maximize your value in that asset.
Because, like, for instance, what if you were saying to me, hey, I'm a really expert fix and flipper, and I need some cash to buy my next property. It takes me about 90 days start to finish. Well, then I would know, okay, about 90 days, I'm going to, see what happens with the sale and the market and all that. Well, in your case, these are commercial and big properties. It doesn't take 90 days. It takes 3, 4, 5, 6 years to work through the entire project. So that's the time frame you need to be keeping in mind.
Yeah, and keep in mind, we're getting cash flow. The cash flow is covering all the debt and expenses of that. Whereas if you're flipping, there's no cash flow coming in. So you got to move quickly, move fast. That's a whole different animal. This one is, hey, cash flow comes in. Any cash flow that's profitable to us, we give out to the specific investors. We pull together and we give them dividends when they're cash flow positive, those assets. So it's something that's it's good for people, good to understand how this works, and it's a great thing to offer people an alternative to what's out there.
Yes. Well, I tell you what, it's really unique. I love crowdsourcing, crowdfunding, new concepts, technology. So if anyone is listening going, hey, let me learn a little bit more about DiversyFund, what's the best way they can learn more and reach out and connect with you?
Yeah, really. We have an app, so we're on iOS and Android. You can download the app, DiversyFund.com. We're really making that experience, put a lot of energy to make that experience great for people, as well as our website, DiversyFund.com. Go to our platform as well to transact there. For myself, social handles, Craig Cecilio, CXC. I'm on LinkedIn, Instagram, Twitter, the usual suspects. So it's very, very easy to find me.
Perfect. Well, thank you so much for coming on, Craig. I really love what you're doing and wish you all the best.
Great. Thanks, Mike. Appreciate it.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.